Whether you're just thinking about starting a business or you've had yours for a while, there's a pretty good chance that you've heard terms like income statement, profit and loss, or P&L. And unless you've taken business classes or you've taken accounting, there's a decent chance you might not actually know what these documents are, or at least not be comfortable being able to really understand what they're telling you. And to start things off, we're just gonna let you know that all three of those names refer to the same document. So we've got that part out of the way. Now, in this video, we're going to be talking about your P&L and what it is that you're going to be able to learn from this document so that you feel more confident about the decisions that you're going to be making in your business, and more importantly, what levers you can pull to improve the profitability in your business. I'm James Masotti, and on this channel, I'm passionate about helping entrepreneurs achieve their personal and professional goals through intentional financial planning. Let's go ahead and dive right into today's video. So let's start off with talking about what an income statement is. And it's basically the scoreboard of sorts for your business. So we're going to be taking a look at how many points we're scoring. And for most people, that's what their revenue or their gross sales are going to represent. And it's also going to track how many points are being scored against you. And I'm going to put that term in like air quotes because that's referring to our expenses. And it's important to understand that not all expenses are bad. Like, there's a reason you have to spend that money in order to make money. But there is such a thing as having excess spending or frivolous spending. And so we do want to make sure we're keeping things in track and that tool isn't turning into an enemy or an opponent for us. So expenses aren't always a bad thing, but they do take away from the score at the end of the day, which is your net operating income, your net income, as well as just what we're going to call the bottom line or your profitability. And much in the same way that a scoreboard is often broken up into quarters or periods, we're also going to be able to break up our P&L into time horizons as well. Most often, you're going to be looking at things in a monthly, maybe quarterly or annual basis. We're really never going to break things down into per day or per week, although you can kind of make little mini financial statements that show you your daily or weekly profitabilities that are kind of like having a little mini financial statement. If you have specific job-based things that you do, we have a process called job costing. That's kind of like running a little mini P&L for each one of your jobs so that you can make sure every job is profitable, even though all of that will roll up into your financial documents and you'll be able to see the results of that on your P&L. The way we're going to create these documents and why we have to create these documents is all based off of the generally accepted accounting principles or GAAP. And the other reason that we have to track a lot of this sort of stuff is because whether you like it or not, you're gonna pay the IRS your taxes. And a lot of the information the IRS is going to generate in order to figure out how much you are going to pay is based on how much money did you make, what were the expenses and the nature of those expenses, and based off of that, you're going to be allowed to deduct certain dollar amounts, and then you're going to pay taxes on what is left over. It's important to understand that not all business expenses are able to be taken at 100% for tax deduction purposes, even though they may be legitimate business expenses. So it's important to understand that your amount of taxes that you're going to pay may not be directly related to what you're going to see on your financial documents. And that's why it is important to have a conversation with your tax strategist in order to make sure that you understand how you are structuring your chart of accounts and ultimately prioritizing where things are going to pay the least amount that you possibly can in taxes, but still maintain a healthy level of profitability for your goals. Our P&L is represented by the mathematical formula of sales minus expenses equals profit. And while that is the technical book definition of what is represented on an income statement, as a profit first professional, I have a different way to approach this. And that is sales minus profit equals expenses. And here's why that matters, right? It's math. You could argue like, oh, well, it's the same thing. It is, but the reason it's not is because of psychology. And this is an important thing to understand. And this is why I'm a profit first professional, is because what we put first in our lives is that which we most prioritize, right? You know, in my firm, we say human first. Why? Because we are prioritizing the relationship that we have with each other, with our clients, and wanting to treat people first and foremost as a human. But From a financial perspective, if you say sales minus expenses equals profit, then you're prioritizing looking at your sales and your expenses first and saying, I get what's left over. Instead of thinking about you need to generate sales because I want to have profit, and then based on the amount of profit I want to have, here's the amount of expenses I can have. We can take it even one step further and we can start with how much profit we want to generate. And we can say, I want to have this much profit. And in order to do that, I need to generate this much sales, and then I can afford to have this much in expenses. So we can make that formula even more prioritizing of profit by saying profit equals sales minus expenses. All right, so why is the P&L an important document? You'll better be able to understand how to connect the dots between what you see in your bank account and what we would call bank balance accounting. We go over lots of that in Profit First, compared to what you're going to see on your financial statements, and you're going to learn how to pull levers in order to drive better profitability and more cash in that bank account. The other thing that it's going to really help you with, as we've already talked about, you're going to have to pay Uncle Sam. And not just Uncle Sam, but you also, if you ever need to go to a bank or to insurance, they're probably also going to want to see a copy of your P&L, because that's going to help them understand, again, how much money you have, where that money is going. And that's going to inform how lendable you are because of how profitable you are, or for example, how much you have in payroll or expenses in vehicles and things along those lines. So that's an important document for all those stakeholders. Now that we've done the overview of what's going on your P&L, let's start diving into each one of the actual sections so you know where to look for each of these different pieces of information. The first thing is going to be the income or revenue and sales. This represents the amount of money that you're bringing in as a direct result of the products and services that you are selling to your customers. So let's say, for example, that you are a home remodeler, then this is a section where you're going to be representing the total amount that you are billing to your clients for the renovations and the remodels that you are doing to their homes. The next section that you're going to see on your P&L might be adjustments to revenue. And this is where you're going to reflect any discounts, any rebates, or any returns that may be associated with your business. So let's take our home remodeler as an example again. And I'm sure whether you're a home remodeler or not, you've probably gotten something in the mail like those Clipper magazines with the coupons that say $500 off your bathroom remodel or something like that. And if you were a home remodeler and you offered that kind of a service, then this is where you would record that $500 discount that you gave to the customer who presented that coupon. The next section on our P&L is what's going to be our net sales. And net sales is basically our gross sales, which again is that top line revenue number that we've already talked about, and where we're going to subtract out the adjustments that we just mentioned. So after we have that bath remodel that we've done, we subtract out that $500 discount, and then we would have our net sales number for that particular financial period. The next portion of what you're going to find on your P&L is what's going to be called COGS, or cost of goods sold. And what's represented here is any of your costs that are directly related to making or purchasing the products and services that you sell to your clients. Using our same home remodeler example, this is where you would put all of the materials that you've purchased, from your sheetrock to your nails, your caulk, anything along those lines. This would include any of your own labor that you maybe have and that you have provided, as well as any direct subcontracted labor. For example, if you had to bring in a plumber or an electrician that's not on staff, but that you subcontracted out to do any work that needed to be done in a hypothetical bathroom remodel that was not able to be done by your team, then that would be captured here as well. The next section of our P&L is our gross profit. And this is generated by taking a look at our net sales and subtracting out the cost of goods sold in order to find out what our gross profits were. When you hear a term such as gross margin or gross margin percentage, then that is the line that we're basically talking about, is what percent of the gross profit is of the total revenue. So this is a very important line for being able to understand where you basically are kind of stacking up before taking into account all of your other expenses if you were only looking at what is directly related to delivering your products to your customers. So using our hypothetical remodel example again and talking about a bathroom remodel, let's say that you sold the job for $10,000. That would represent your gross sales. We've already talked about there being a $500 discount because they had a coupon that they provided. And so our net sales was $9,500. If our cost of goods sold was $5,000, then that means our gross profit would be $4,500. And as a bonus, that means that our gross profit margin is 45% on this particular job. And if that were the only job that you did for that particular month, then that would be your financials through the gross profit for that particular month. If you had more jobs than that, you would basically follow all of that same logic, just stacking in each of the sales, subtracting out your discounts to get to your net sales, taking all of your cost of goods sold from all of the jobs, adding all of that together, and ultimately coming out with your gross profit for that financial period across all of the jobs that you've done. Whether you're new to business or you're looking at what I've got on screen and thinking to yourself, man, that looks nothing like my chart of accounts, but I wish it did. Well, there's good news. You're in luck because we've got a free template chart of accounts that we've put together that you can download and use as a reference for building your own chart of accounts, adding in things that are missing, subtracting out things that you don't need. But if you go ahead and scan the QR code that's on your screen or click the link in the description, you'll be able to download this free resource that we've made for you. The next part of your P&L is going to be for the rest of your expenses. And the rest of your expenses are still going to be broken out into two categories. They're going to be direct and indirect expenses. Direct expenses, your COGS are going to play a large portion of what goes into that. And because we've already covered those in COGS, we're not going to add them again into this section. However, there are other direct costs that you may want to capture in this particular budget. That could be, for example, any freight or shipping expenses that you have in order to get the product to your customers. What would be considered freight in costs, so any shipping expenses that you incur to get the product to you, are part of your COGS. But any shipping expenses that go out of your business for you to get the product to your customers are not included in your COGS. You would also put sales commissions. If you have salespeople, that would not fall under COGS. That income would fall under the direct expenses outside of COGS. The next section of the expenses is going to be the indirect expenses. And these are often called overhead expenses. And with these overhead expenses, you're going to be able to put them also into some smaller categories. And we always like to be able to kind of bunch these categories in a way that makes sense based on your particular business. Some pretty common ones would be things like legal and professional fees, would be payroll, it could be vehicle expenses, travel expenses, marketing and advertising expenses, just to name a few. There are some that you may not be able to put into specific categories, but a lot of them will fall under these categories, and you'll be able to look at these as broad categories and then drill down into lower levels of detail if you wanted to. There's one other area of expenses that I personally like to talk about, and we'll touch on it here and I'll touch on it a little bit later as well, and that is owner expenses. There's a lot of times where folks will include owner expenses into this expense area of the P&L, and from an accounting perspective, there's absolutely nothing wrong with doing that. However, a lot of business owners struggle to understand the actual value of everything that they pull out of their business. And if you ever wanted to sell your business, being able to show the owner's benefits is a huge aspect of the way that businesses are ultimately valued when they go to market for sale. And so if you're able to split these expenses out separately into its own category on your financial documents, then it can actually help you feel good about the total value of benefit that you're deriving from your business beyond just the salary that you're paying yourself. But it'll also help, as I said, when you eventually, if ever, decide to sell your business. The next part of what we're going to find on our P&L is our net operating income. And our net operating income, or NOI, as it is sometimes abbreviated, is generated by taking our gross profit and subtracting off our operating expenses. And by doing this, we have our net operating income, as mentioned, and that's term is really coming from the value or the benefit, the profit, if you will, that we're generating from our core business operations. Now, this isn't ultimately our operating income or our profit or our bottom line, because we still have a few more things that we're going to talk about. And these last sections that we're going to talk about, we're kind of going to talk about them together, and that's the other income and other expense categories. And these aren't necessarily applicable in a lot of businesses, although most businesses will probably have an other income bucket, if for no other reason, tend to reflect the interest they are getting paid on money that is in their savings accounts. So if you have a business savings account that's generating a monthly interest, then that's going to be reflected on here. And so while it's not going to be a large amount of money, it is still income coming into your business that needs to be reflected somewhere. And so we reflect it in this other income area so that we are not getting it confused in with our income that's being generated from our actual business activities. Some other examples of things that could fall under other income would also be if you received dividends, if your business owned any stocks or anything along those lines that it was receiving. You could also reflect here any grants or one-time income that you receive coming into your business that's not from core operations. You could potentially have foreign exchange benefits here. So if you priced your product based on a particular exchange rate and you sell internationally, and due to an exchange rate change, you actually had more favorable income coming into your business, you could reflect that in this particular area as well. Going into our other expenses is where you're going to find things like your interest expenses. If you've ever had to pay any like fines or penalties for things, you could also have losses as opposed to foreign exchange rate changes, where you're bringing in less money than you anticipated due to transacting in a foreign currency. And those are other expenses that might be captured in here that may or may not be applicable to your particular business, but it is important to understand that they are often broken out in this other expense category below your net operating income. The next line that we're going to have on our P&L is going to be our net income. And yes, we have finally reached it to the bottom line. So this is what we're going to call our profit, at least on paper. And the reason I say that is because, again, as a profit first professional, one of the things that a lot of business owners come to me to talk about is they say, hey, I've got my P&L and it says I've made all this money, but I look at what's going in my bank account and none of it's there. Where did it all go? And that's because there are things that can fall into your P&L that are non-cash things. Or again, you may have revenue being accumulated because a sale happened, but maybe your customers haven't paid you yet because it's sitting as accounts receivable on your balance sheet. And so it's important to understand that this profit at the bottom, they're paper profits. They don't necessarily reflect what most business owners or a lot of business owners think about when they think about profit. What they're thinking about is, show me the money, right? Jerry Maguire, I want to see the money in my hand or in my bank account. That's profit to most business owners. And so it's important to understand that when we talk about the P&L and we talk about your net income and the profit that is being generated by your business, that's not what we're talking about. And again, when we take it even one step further, when you talk about your taxable income, it's also not going to match that which is being shown on your financial statements. So it is important to understand all of the things that are going on that go into achieving your net income, but also being able to understand how that's different than the amount of money that you're actually getting, and that it's going to be different than the income that the IRS is going to say you have to pay them based off of. Now, I have given you kind of the mathematical breakdown for each one of the sections. So to get to our bottom line, we're simply going to take our net operating income and we are going to subtract from that any of our other expenses, add in any of our other income. And if you have separated out the owner's expenses from that as well, you would also subtract that in order to get to your net income on your P&L. Now that you've had that rundown on how to find everything on your P&L, you're going to be able to make better decisions. You're going to be able to dive in and understand where your different expense ratios are in terms of how a particular expense compares to your revenue. And you're going to be able to dive a little bit deeper to understand where your margins are, what your profit margin is, your gross margin is, and all of that sort of stuff. In order to continue digging a little bit deeper, we've talked about there's certain financial pieces of information though that are not captured on your P&L. and many of those are captured on the balance sheet. So click this video right here and join me in the next video to find out how you can also use your balance sheet to learn more about the rest of the financial picture of your business. I'll see you there.